Here's a recent trade I just finished, and it made a huge 26% gain, a massive profit helping out my portfolio. How did I know this chart was going to go up? Because of these candlestick patterns that you're going to see right here. In this video, I'm going to share all my favorite candlestick patterns. You can now understand and read chart patterns, predict chart direction, and become a more successful trader and make plays just like the ones you're going to see here. Head on over to my YouTube channel where you can check out some strategies that you can put your new knowledge to the test. The first candlestick pattern I want to talk about is the Marubozu. The Marubozu is a huge green candle without any wicks. Basically, it's just a big green rectangle. The cool thing about this pattern is that it is a good indicator that the price will keep heading in the same direction that it's currently going. You will usually see this candle in the middle of a trend, maybe in the beginning, but what it's going to do is it's going to confirm the trend is going to keep moving in that direction. Price is starting to head upwards. Then we see a bullish Marubozu candle. Notice that the candle has no upper or lower wicks. This means that the lower price of this candle was the exact same as its opening price, and the highest point of this candle is the exact same of the closing price. This tells us that buyers are in complete control. Check this out. Look what happens. Another really good candle that I like to trade with and look for is the engulfing candle. It's such a strong candle because it can give you the exact point of when the reversal is about to happen. It's a candlestick to which the opposite color of the previous candle, and it simply engulfs it. A bullish engulfing candle opens at or is lower than the previous candle's close or closes above the previous candle's open. So basically being bigger than the previous candle on both sides, top and bottom, making it look like it's engulfing it. Let me show you an example. So here we found a pretty strong support where price bounced off it multiple times, telling us that it really respects it. We see the price comes back down to the support. We can expect it to bounce back up, but before entering, we need just a tiny bit more confirmation. Here we can see that the bullish engulfing candle, it completely engulfs the previous red candle and is exactly at the support. This is an extremely bullish sign, and we can be pretty confident that this price will go up from here. So what do? We enter the trade and look what happens. It is important to note that just because you see a bullish or bearish engulfing candle does not mean that price is going to reverse. When you are trading, you shouldn't purely use candlestick patterns. You should be using them as a guide or an aid or a hint to which will help you mark your path and not just purely use those for decision making. You should use other tools with candlestick patterns like support and resistance, indicators, or different strategies. So let's just be clear here. Just because you see a bullish engulfing candle doesn't mean that the price will go up from here. Next, we have the momentum candle. A momentum candle is a lot easier to spot than the engulfing candle just because of its size. A momentum candle is simply a candle that is 2 to 3 times bigger or larger than its previous candle. This candle is very powerful because most of the time after it happens, the price will continue to go in that direction, making it a great time to enter the trade. The most efficient and effective way to use this candlestick pattern is when you see choppy markets, where the price is just moving sideways. If you see sideways markets and you see a very large momentum candlestick appear, 2 to 3 times larger than its previous candle, you can be pretty certain that this price will continue to move. Why does this happen? Well, think about it. Whenever there is sideways market, there is a lot of shorters stuck in their trades. They don't want to exit their trade because the price is moving sideways, and it can be moving sideways in either direction. So what happens is they draw some support and resistance lines. They set up their stop losses right above, let's say, the support line here. This means that there's going to be a ton of traders selling at the stop losses all over this area above, meaning that if there's a sudden price movement, the price hits the liquidation zone and all these stop losses get hit, and that just adds fuel to the fire and sends the price continuing in that direction. Also, when price breaks a choppy market like this, it's usually a start of a trend in that direction. So it's the same type of strategy with shorts. If there's a choppy market And there's a big red candle. It's an indicator that we're going to go short. Now we come to the fun stuff, the Doji candle. The Doji candle is a candlestick with a very, very thin body that has wicks generally the same size on either end. Why is this so important? Well, because it can be a great indicator of when the price will reverse in a certain direction. What this candlestick represents is that the market is uncertain to which way it wants to go, and it's having resistance. Whether there is uncertainty or resistance, the price will more often than not head in the opposite direction. Here, I'm going to show you a couple opportunities here. So here we have the price moving down pretty hard. Then a green candle appears, and it just so happens that it's a Doji candle. This is telling us that sellers are starting to be less confident and buyers are starting to enter, making this point a great opportunity to enter. What I normally do though with Doji candles is I just wait. I wait to see another candle or two appear of the same color. This will help me confirm that the price is in fact heading in that direction. In this example, you can see the green Doji. So I wait and I see a few more candles. This is giving me the confidence that the price will continue in that direction. So I enter. You can see where I entered the trade and then boom, the price goes up from here. There are multiple different variations of the Doji candle. Let's take a look. Here are a few of the regular Dojis that you are going to see. You have the regular Doji candle that we just talked about, the long-legged Doji, which is basically the same, but it has longer wicks on either end. You have the gravestone, which has a small body and has a big upper wick. And you have a dragonfly, which is a small body with a big bottom wick. All of these Dojis tell the same type of story. Usually it's a reversal. All right, now let's talk about the hammer. The hammer candlestick is usually a candle that looks something like this. It's got a fairly decent sized body and a long wick. Essentially, this candle is telling us that sellers got that price all the way down, but buyers said, no way. And they pulled that price all the way back up. This is usually an extremely bullish sign and can tell us that the market will continue in that direction. Now on to the tweezer. The tweezer candlestick pattern is generally formed like this, where you can find a red candlestick followed by a green candlestick, both having similar size wicks coming from the bottom. Now don't be alarmed, they're not going to be perfect on your charts, but it looks something like this. See this pair here? This is a pretty good idea of what this will look like. And then this kind of tells us that the chart is going to move upwards. Here you can see that the price is about to hit this support. We see a red candle with a wick at the bottom, and then right beside it we see a green candle with a wick at the bottom. This is telling us that the price has respected this support and it's now getting some momentum upwards. Speaking of support, if you've liked the video, please share this with a friend, subscribe to my channel, and leave a comment below and let me know which candlesticks you prefer. Thank you again for watching, and we'll see you in the next one.